All right, and here we are live. Everybody, welcome to the second live stream of the day. Now, this takes precedent because there's some funny things going on with the IRS because the IRS likes to make your life hard. And because of that, and there's a recent rule change which we have to comply with before the end of the year goes up, we had to bring in some emergency gentlemen who could help me understand what the heck is going on. David Kemmerer, who's the Coin Ledger co-founder and CEO. David, welcome back to the channel for the third, maybe fifth time. I don't know. We've done a lot of these.
Yeah, it's good to be back, and tax season's right around the corner, so it's timely.
It is timely, and thankfully, we've got someone else who can put this all together. I've got Andrew Gordon, and I'm going to link his information in the description below. If you want to bombard him with questions, I'm just kidding. If you want to follow him on X, here's your information. And then also here is on the site. So Andrew here is a tax attorney and CPA. Andrew, I appreciate your time. And we only have half an hour. So let's make this work. But again, thank you for coming on. We all appreciate it.
Thank you for having us.
Absolutely. Okay, let's get down to it. What the hell's going on? So why does the IRS hate us? Why do they want to make our life so hard? And what is this thing that we have to do before December 31st? David, if you could just give us a brief explanation, and we'll roll over to Andrew so he can give some input, and then we'll go over some Q&A.
Yeah, and as we were talking about before, a lot of this still has some ambiguity to it. So Andrew and I can hit on the down and dirty high level. There's inevitably some gray areas, especially when it comes to people's specific circumstances. So I do think, you'll hear Andrew and myself say, hey, we recommend you actually talk with your tax professional. But at a high level, this all comes from really the past few years, right? The IRS has been vocal and they've passed their broker reporting regulations, which again, at a high level, exchanges like Coinbase, like Gemini, like Kraken are going to have to start reporting a 1099, which reports income to the IRS and to you, the user of that broker exchange, starting in the 2025 year. Now, the trouble that this brings is the Coinbase, the Krakens, the Geminis, they can only give a 1099 detailing information that what occurred on their own platform, right? Within their walls, within Coinbase, within Kraken, within Gemini. So the 1099s that they're going to give you starting again next year, not this year. This all applies to tax year 2025, which is due in 2026 in the US. Those 1099s will start getting mailed out, and they'll detail the gains, losses that happened specifically on their brokerage, on Coinbase's within their walls, again, within Kraken's walls. And the IRS realized, right, well, many, if not the vast majority of crypto investors right now are filing their taxes as if everything's getting consolidated into a single wallet. This is what you'll hear referred to as the universal kind of costing method approach, which is at a high level, if I buy Bitcoin on Coinbase and I sell it on Kraken, from an accounting perspective, we're treating the basis, that original purchase, as being able to be sold on different platforms. And it makes the accounting a lot simpler. Moving forward, right, what the IRS is requiring with this new revenue procedure is they're saying, hey, so that your records are going to better match up with what these 1099s report next year, we need you to calculate your gains and losses and track the basis at a per wallet level. So that means if I buy Bitcoin on Coinbase and I sell it on Coinbase, everything that's getting calculated with your gain and loss is
Sure.
sticking to that single wallet. You'll no longer be able to bring everything into a one wallet for the tax reporting of it, which means you're going to have to do a much better job tracking, every time you transfer crypto from one wallet to another, because that will pass basis or not. This might have been a confusing explanation. Andrew, maybe I'll tag team to you if you have anything to fill in from the high level perspective.
Yeah, sure. Hello, everyone, and glad to be here. So to just add a little bit of context, hopefully everyone that's watching this understands that crypto tax reporting is unlike tax reporting for any other investment, for instance, in stocks or securities. If you're investing in crypto, the responsibility is typically on you as the taxpayer to to get all of your data from all the different sources and generate magical tax reports using software such as CoinLedger in order to generate those reports. There's no one that's out there creating them for you. With stocks, you've got, if you traded stocks on Robinhood, Robinhood sends you at the end of the year a tax form. This tax form is called a 1099-B, and it has typically all of the information you need to file your taxes: cost basis, gain and loss, everything you need. Crypto, that hasn't existed, at least not yet. And so, as David mentioned, starting in 2025, there's going to be this new form 1099-DA. After a lot of debate, a lot of argument, Department of Treasury issued regulations. I think it was June, July of this year. And they said that the definition of brokers is now expanded to also include digital asset exchanges. And as such, brokers are required to file tax forms and send information to users and the IRS. There's a lot of debate as to who should be brokers. Is it just centralized exchanges, wallets, not centralized exchanges? And the current regulations are a little bit limited. It's centralized exchanges typically, and generally we're talking about the ones in the US, at least now. But there's also a lot of discussion that unhosted wallets, decentralized exchanges will also be required to report in the future. So we're kind of at the tip of the iceberg of all of these different data sources reporting to the IRS and to you tax information. But the problem that David mentioned and he expressed so eloquently is that these different exchanges only know, or wallets only know what's going on their source, right? Coinbase doesn't know what you're doing on Kraken or vice versa. And so there are these new regulations that were also passed, a revenue procedure that helps taxpayers identify the cost basis that they already have. And so as we go into this per wallet accounting treatment and all of these different exchanges are reporting, that you can actually have cost basis information to fill in the gaps. And what do I mean by that? Well, if you're trading on Kraken, but you bought originally on Coinbase, Kraken doesn't know the amount that you paid for instance, Bitcoin on Coinbase. Right. They will only know the sales price. And so when they issue this form, 1099-DA, it's going to likely have a blank for the cost basis. And we'll need to fill that in. Taxpayers will need to fill it in. With the help of CoinLedger, we'll be able to do so. But we need to be able to do it on a per wallet basis, which is something that's very new and requires some work. And we're here today to talk about it.
I gotcha. Okay, so when we're talking about, because this is, I think, the thing that confuses people when they say the per wallet basis. When I think of a wallet, I think of my cold storage device wallet. I think of a ledger, I think of the Trezor. What you guys are talking about and what the IRS is talking about is the wallet that's within the centralized exchange. So let's say, for example, a Bitcoin wallet. A Bitcoin wallet on Coinbase is still a Bitcoin wallet. And then let's say, for example, I have Ethereum. Well, I can't have my Ethereum in my Bitcoin wallet. So it has to be in an Ethereum wallet. So now I have two wallets, correct? So, and then we just go down that line with all the degenerates that I have in the comment section. Now we're talking about 60, 70, 80 different wallets on that centralized exchange. So let's say, for example, like you said, I buy Bitcoin at 10,000 on Kraken. I go over to Coin on, and let's say it's December 17th, 2020. And then I go over to Coinbase and I sell it 4 years later. And Coinbase doesn't care what Kraken's doing, but they're going to have to care because that cost basis was 10,000 on that day on Kraken, but maybe on Coinbase, it wasn't 10,000. It was 9,972 or whatever it was. So because of that, I'm going to have to make sure that every time that I do these things, I have to lock that price in so I know my cost basis and what my actual gains are, or excuse me, my capital gains are. Is that how it works? Because to me, like Andrew, it sounds like that's kind of like what we're doing already almost with CoinLedger. Where am I wrong here?
David, I can take it, or you tell me.
Go for it.
Okay. So the way that it has typically been handled is on a global or a universal basis, where all of the wallets are accounted for in the same lot. And so CoinLedger would, for instance, say, no matter where you acquired it from, depending on your cost basis allocation method, we're going to treat it like it was sold on Coinbase. Whereas in a per wallet method, let's say you also did buy some Bitcoin on Coinbase, and then later on you sold some, but along the way you transferred, it would just look at what happened on Coinbase. And you couldn't say, well, I want that other cost basis from that other wallet to apply. And for the last several years, it's all been in the same lot or the same accounting stack. Where now, if you have a Bitcoin wallet on Robinhood, or a Bitcoin wallet on Coinbase, Kraken, and you sell from Kraken, you're going to first go to your Kraken stack before you could have gone to any of the stacks.
And I can give a very simple example that would make this easier. And it is more per account. The per wallet can get confusing. So just let's go do a very simple example. Let's say you have 3 accounts, account A, account B, and account C. Let's say on account A, you bought Bitcoin for $10,000.
Yeah.
And you sold that same Bitcoin on account C for $20,000.
Right.
Historically, CoinLedger imports all of that data, and we see the sale on account C, and we pull the cost basis from account A.
Right.
So that we can accurately give you, hey, you only made $2,000. Where if you're missing basis, it's going to say, hey, you booked way more gain than you really did.
Yeah.
In this new world, you're no longer allowed to pull the cost basis from a different account. You'd need to say, to show, hey, I transferred my Bitcoin that I bought on A over to C, which again, CoinLedger does. And then we can pull the basis. So the only times this is going to get really tripped up, and if you guys have done this personally, you know, certain exchanges don't give clean data. Not all crypto tax software is built the same. This gets messy. So it's much simpler from a software perspective, from an accounting perspective, when we could just bring all of those accounts into one unit of record. But now we have to keep them siloed off, right? And so it's almost like you're reconciling 3 different books instead of just one, putting it all together, if that makes sense.
Yeah, that makes sense. But that's only if, say, you've got a Coinbase wallet, a Kraken wallet, a Binance wallet, and you're selling across those 3. What if you're just take everything, like you said, A, B, C, and you only sell in one, and you pull everything into that one wallet and sell from there? How would that would work in this new system?
Yep, that would work. It's just making the accounting more difficult for your average user, because the universal cost basis method, when platforms like CoinLedger, or if you're just doing this in Excel, when we could pull it all into just one spreadsheet to describe, right? You didn't as neatly necessarily need to perfectly account for every transfer every time, right? All you need to have is the buys and sells, really, to be able to accurately calculate gains. Where now it's every movement of crypto you really need to capture, so that you can see where the original cost basis stems from. And just, you know, running this company for the past 7 years, a lot of people are going to run into difficulties, missing cost basis warnings, just balances that don't tie out for gazillions of reasons. The data in this space is extremely messy, and it's going to create more headache. But we've been doing this for 7 years. We're building an immense amount of tooling to try to make this as simple as possible for people.
Okay. Well, so here's what I'm thinking, that this is going to get messy, and the IRS has to have some kind of expectations of not being perfect. Andrew, if we have some kind of good faith type of measure, or like, hey, look, you know, I went through this whole procedure. I chose which accounting method I want to do. Maybe there's some mistakes, maybe there's not. I'm not here to hide anything. And of course, now I must preface this. Andrew Gordon is not anybody's lawyer, so this cannot be construed as legal advice. This is just Mr. Gordon coming on, just kind of educating us across the board. So don't take anything, and always consult with your tax and legal representative. But Andrew, if we're doing all these things and we have some mistakes here and there, do we know potentially the downside of the IRS is taking? And have they even acknowledged that they're going to do anything with this, besides just like, hey, we're going to try to enforce this?
Yeah, great question. And so with all of this, the IRS is going to have what I would refer to as a fire hose of information. They're going to have more data than they've ever had before about trading activity. And I'm not trying to scare everyone out there, but just speaking from my experience in the trenches against the IRS on a daily basis, we've seen more IRS audits, notices, bills towards crypto investors in the last year than the last 5 years combined. The IRS is more aggressive than ever, and unfortunately, they don't understand crypto. Last week, client got a notice from the IRS, a mini audit, saying that they owed $200,000 for $600,000 of stable coin sales. Just humorous, right? A joke, right? And now he has to hire a tax professional to deal with all this. He didn't report the stable coin sales on his tax return to begin with. But just shows the lack of understanding by the IRS if you're going to devote resources to a mini audit on some of the stable coins. So it's really on you, the taxpayer, to get the data as best as you can. And there's a wide difference between using just the Coinbase report versus using CoinLedger to accumulate all the different records from all the different sources and do the best you can. But even just on CoinLedger too, you've got to review your transactions. It doesn't do everything for you. You've got to identify your transfers and other actions as well. But by doing that, typically you can avoid IRS problems and IRS scrutiny. The people that we're seeing are not taking the time trying to report using CoinLedger and so forth. There's typically other issues as well. So not trying to scare you, but IRS enforcement has increased, likely to increase more with this data. With this, it'll make it much easier for them to do so as well. There will be gain and losses reported, but as myself and David talked about, there are going to be these massive gaps in cost basis information because the transfers need to be accounted for. And that will ultimately fall on the taxpayer because when these 1099 DAs are issued, it will show the sales price, but it won't show the cost basis. And if you don't do the work, unfortunately, of trying to trace it, then you'll be left with a higher gain. So now's the time to do it.
Gotcha. And that would, so there's two questions then. So what does this all come down to as far as December 31st? We have to do something before that date. What is that thing and how do we do that thing?
Yeah. So in the revenue procedure, which is kind of the ruling that the IRS came out with later this summer, they're kind of defining how taxpayers can switch if they were using this universal cost basis method, how they can effectively switch over to use now as we get per account or per wallet accounting. And they define, two different ways that the taxpayer can effectively switch over to this new system so that they're good to go for 2025. We have some content on this. We'll have, this is the core of it, but we'll have even more materials usage for folks in 2025. But really you can use a specific identification method, which is in 2024, you're going to take all of your transaction history up to that date. You're going to take a kind of a snapshot of, okay, I have these 10 coins I'm still holding. And I need to look at where those coins are if I have multiple wallets or accounts. And I need to allocate any outstanding cost basis into each of those wallets. Because again, historically, that cost basis is in a single queue. Now it needs to get allocated to potentially multiple queues, multiple different accounts. CoinLedger will be supporting the global allocation method, excuse me, and I need to pull this up, as defined in that revenue procedure, which is essentially instead of specifically identifying this tax lot to put over to Coinbase and this cost basis lot to put over to Kraken, I'm going to choose a rule, which in CoinLedger's case, we're looking at highest cost basis gets distributed to the wallets with the highest balance of that asset in that order. And that will happen algorithmically. So as long as your data is up to date in CoinLedger, essentially you should simply just resync all of your wallets and make sure you've pulled in all of your data into CoinLedger. That algorithmic switch will happen automatically for all US users who need to switch over to this new global, or excuse me, per account cost basis method. That's a mouthful. After that.
That is it. Okay, so what we got to do before the 31st is essentially decide which way we're going to go. And everybody, I linked that compliance blog post. There's a link in the description. You can check that out. If it's not there, just refresh, because I just added it right now. So you can go through this whole process and do what it says to do as far as for that compliance. And you can say, what was it again, David? Not the universal method, but there was another one.
The one that CoinLedger is supporting, or?
Yeah, no, the one CoinLedger is supporting.
So CoinLedger is supporting the global cost basis method to switch. I might be mixing up some words here. There's a gazillion of these words. And then the one that we're not supporting out of the box right now is the specific identification, which is when you would actually have to go through all of your records and specifically say, I want to move this cost basis over to Coinbase, and I want to declare that and have some reporting saying this is how I'm allocating.
Gotcha. So this is all about, it sounds to me like this is all about cost basis, like when you actually picked it up, how much it actually cost versus what you say it will, or what you think it might. Is that fair to say?
Correct. For this time in the year, it's all about allocating your remaining cost basis. Essentially, if you're still holding crypto, you need to specifically allocate that to the wallets that you're holding or continuing to go forward with.
Gotcha. Okay. Well, the top of the hour is coming up. We got about 8 minutes or so. Let's go to a little Q&A and get some questions in there. So the first things first, this is what I got from email. It says, after January 1st, it seems like we're no longer allowed to match trades across different accounts like we just talked about. But since crypto can be moved between accounts, how would it work if you wanted to do that? I think this would be that method that you were just talking about, David. Like you guys are going to justify the universal method, but not the cost by basis, right? So what I guess what they're asking here is, can we go back and do this?
So in this example, he's saying you still will be able to mark transfers, right? That's the first question. If you buy Bitcoin in Coinbase and you truly did move it to a different wallet and sold it there, there's no limitations of you doing that. And as long as all that data is imported into a platform like a CoinLedger, we'll still be able to generate your gains and losses on a per account level. And so that's rule number one. Now, okay. The second part of the question is, what if I do this accounting and allocation post Jan 1, 2025? Well, the IRS has just said that you will not qualify for the safe harbor, which that is still an area that is not explicitly clear what that means. But that is what they have said in the revenue procedure. Andrew, I don't know if you have any.
Yeah, sure. I can talk a little bit about that. So historically, the IRS has said you have to use first in, first out, or specific identification. And those are cost basis allocation methods. And now with the new revenue procedure, there's this safe harbor. And the safe harbor says that if you make an election, and it's generally by January 1st, there are some exceptions, but generally by January 1st, if you make an election using either specific unit allocation or a global allocation, you can use a reasonable basis or reasonable allocation of your remaining cost basis. Now, what does that mean? It means that, for instance, you can allocate it so that your highest cost basis is sold first. Or maybe allocate it so your oldest is sold first. Or maybe next year you're going to be at a low tax bracket, so you in fact want to generate the gains. So maybe it is the lowest cost basis first. But you can choose reasonably by the end of the year, as long as you fall under the safe harbor, the way you want that to be allocated. And David discussed CoinLedger, and they're using the global allocation, and within that, how they're identifying it. So they're taking advantage of the safe harbor. But that's what has to be done. And if you don't do that, then it typically, from my understanding, will default to first in, first out. You haven't chosen an allocation, so it's just first in, first out. So yeah, hopefully that answers.
So that would answer this question here, right across the board. How can you tell which Bitcoin, Coinbase, or Kraken I'm selling? It's either FIFO or FILO, right? First in, first out, first in, last out. However you want to distinguish between, and that's up to the taxpayer to decide what they want to do. Correct?
Well, that's the whole big issue here, which is that most people, everyone watching this, have bought crypto over time, and so they have a stack. They have holdings across different wallets, and we have to figure out the current cost basis that we have. How do we allocate it? Which wallets have what cost basis? And so the safe harbor says that you can have flexibility. It doesn't even have to be FIFO or LIFO. You can, as long as it's a reasonable allocation. And David, if you could remind us, coin ledgers.
Yeah. So what we're going towards is highest basis to highest balance. So if you have 3 Bitcoins in your stack, as Andrew described, and you bought each of those at, let's say, 10,000, 20,000, 30,000, we'll first move, again, this is happening algorithmically, your highest basis Bitcoin to whichever wallet has the highest amount of Bitcoin. So let's say, that's 1.5. We would first take your highest cost basis, which is 30,000, and move that. We're not moving your assets, literally. It's all from an accounting perspective. And then the next cost basis tranche is what it's called, would go to the next highest wallet, if that makes sense. And that's going to go until your stack is exhausted and we've allocated basis to all of your wallets that you hold Bitcoin in.
If you can do that, and so this would come down to this question here about Coin Ledger itself. And Rick says, I'm still confused. Is there a platform that will help us figure out taxes? It sounds like Coin Ledger doesn't support this change. David, can you
be very clear? Coin Ledger supports this change, and we will make it very, very simple. And that's our business model, to do your taxes. So we're not leaving anyone high and dry. You'll be able to use Coin Ledger now, just like you have in the past. And while things, from our perspective, kind of get more complicated for us, the software engineers behind this platform, we're going to make it as simple as possible for you, the end user. That's
really all we care about. As long as we have enough to worry about. So look, right now, Andrew, I don't know if you have to go, but it's at the top of the hour. But there's still some more questions. Maybe me and David could answer those. But I don't want to keep you, Andrew, if you have to take off. But let me see here. Frank says,
I'm going to head up, but thank you. Thank you for having me.
Yeah,
yes. Thanks. Thank you, David. Appreciate it. Just want to be respectful of time and not be like, I want David to come back. I don't want it to have to like say, I'm not going that guy's show again. Okay, let's see. Micah says, I just use an average cost as my cost basis. I guess we can't really do that anymore.
Technically, you were never allowed to do that.
Okay.
But so, no, I would not advise for that. But go ahead.
No. Okay. What if we keep all of our activity on a DEX, decentralized exchange? Because they're not going to give us a 1099. But the thing is like, if you want to interact with a DEX, you have to get crypto from somewhere. Mm-hmm. So that's just it. Like that's just it. Like you could buy Tether or you could buy USDC on Coinbase, right? Put it into your MetaMask wallet or Phantom, whatever chain you want it on. Do all the different trades you want for 4 or 5 years. And then you could, at some point, if you wanted to put that back into dollars, you got to go to an exchange, right? And if you go to an exchange, they're going to say, how the hell did you took out 50 USDC 4 years ago, and now you're giving us 5 million? Where'd you get this? Is that?
Yeah. So also just the way this would actually be handled, let's say, well, how are you interacting with that DEX? You're not keeping your crypto on the DEX. You're keeping your crypto in a wallet, and your wallet is interacting with the DEX. So it's in a wallet. Let's say it's in MetaMask. Okay.
Yeah.
Coin Ledger. And again, if you're just doing this by hand, you'll just need to report the gain and loss by that wallet, right? So maybe the question here is getting more into tax evasion, which I wouldn't recommend. But really what's happening is maybe you move some Ethereum into MetaMask, and then you're interacting with the DEX. In a platform like CoinLedger, we're just going to track that original transfer to the MetaMask so that we know what the basis of that Ethereum is. Then as you make trades in the MetaMask wallet, we can tell you what your gain loss is in that wallet, because we have the basis from the original time you moved crypto in.
So, hey, so Dave, this will be the last one another one I thought about. So like when I log into CoinLedger, it's got, okay, here is, it'll say like Coinbase, and I'll have all the different transactions, and it'll say Kraken, here's all the transactions and whatever else. But it doesn't have, well, actually that's not true, because like I've uploaded my wallet information, like my MetaMask, my Phantom, and my Ledger, and my Tangems, and they're all right there. Those are all the wallets, because I need all those wallets for like the cost basis. And there's something else I have to do at this point, because I've pretty much done that part.
No, if your imports are up to date, then you're going to be, in a great position to take advantage of the safe harbor, and CoinLedger will, migrate you over to per wallet cost basis tracking in 2025, which again is not due for another over a year. So for all the taxes that are due in this coming April, you can still use the former universal tracking.
Perfect. Hey, I know you guys are working on it, and you've already pretty much got it in play. What we should do, and everybody in the comment section, tell me if you want to do this. Let's set up some kind of like dummy account, and we'll do like me and you do like a live show of how CoinLedger works and how to upload your information for different particular wallets and exchanges, and how that would look like, and how the reports would be generated. Can we do something like that to do a dummy wallet?
Oh yeah, very easily. Yep.
Oh, great. Let's just do that, and then we can tell everybody how to do this. Okay. Let's see. I have all my cost bases. So Brian says, well, this is just a tax question. Do you have to do your taxes if you just lost money?
Wow. Yep. Technically, you still need to report anytime you incur a taxable event. And a taxable event is anytime you dispose of crypto, which is a form of property. So the long answer to the short question is yes, technically you do, but it's only advantageous for you to do so because it reduces your taxable income.
Exactly. Does this apply retroactively, or does it start on a certain date? This starts on January 1st. So we have to start to essentially safe harbor on December 31st. Let's make this concrete. On December 31st, we just have to, do we have to like have our own documentation of like, this is how I want to do my cost basis? Do we have to report like what kind of, like, I'm going to do a universal method, I'm going to do this? Do we have to report that anywhere? Or is that just like, we have to decide at that point?
Yep. Exactly. So I would just save the email that CoinLedger sent all of our USA users saying that here is how we're going to allocate your basis. And you can use that as your declaration if you ever need it. Again, that's only if someone comes knocking at your door years from now. There's really no action you need to do to take a declaration. And we're also going to have a document that shows exactly how, well, the breakdown of that allocation that you'll be able to download beginning 1/1/2025. So the only action required from users is to make sure your account is in a ready state. And that just means you've synced all of your wallets. You've brought in all your data from all of your exchanges, and your CoinLedger account is up to date, because then CoinLedger will be able to do this on the back end with no work from you.
Yeah. Yeah. We'll take that. Janik says, I'm confused. Can't the tax software just look at a wallet? Why does it matter what happens on a DEX? It's because the wallets themselves, like on my MetaMask, it doesn't give me a cost basis that I'm aware of. Unless, correct me in the comment, is there a cost basis in all of our wallets? I'm not familiar.
Well, it just does matter what happens on the decentralized exchange. And I could give like a simple example. So let's say I have a MetaMask wallet. Let's say I originally bought $1,000 of Ethereum on Coinbase, and that's what I originally moved to the MetaMask wallet. And let's say I traded the ETH for, name your asset,
Tomato coin.
Bitcoin,
Sure,
through a DEX, and now you have wrapped Bitcoin in that MetaMask wallet. Well, you need to document that trade, because that trade is a taxable event, right? You're disposing of Ethereum at some price point, and you're getting wrapped Bitcoin. And so CoinLedger automatically does this, but you need to, have record of every single taxable event, because you're realizing income. So in this case, if you traded that ETH wrapped Bitcoin, and let's say when you traded that ETH, it was worth $2,000. Right. You just incurred a $1,000 capital gain, because you bought it for $1,000, you sold it for a fair market value of $2,000. By the letter of the law, you need to report that $1,000 gain on IRS form 8949. Again, this is all stuff you don't need to worry about. CoinLedger does this for you. So it very much does matter what happens on a DEX, even though it's just in the wallet. But to your point, to who's ever asking the question, we just need your wallet address, because CoinLedger will go and read, the Ethereum blockchain and see exactly what happened, and we'll combine those accounting records to do this for you.
Yeah, I mean, like when I first heard about this, like I watched a video with Andreas Antonopoulos, and I think I sent it to you, and I was like, it was comprehensive, that's for sure. But I'm like, I think this is a little bit too complex. I think there's a way simpler version of this. So it's not like there
would be a way simpler version if the IRS made a simpler version, but it gets convoluted so fast. There's almost no way to make this just like dumb simple. There are edge cases that we're not even hitting in this video that I'm sure the comment section will be good, and I can go in and answer some questions after this. Yeah. But inevitably there's edge cases, and that's what makes this confusing.
Yeah. So there's a couple of things. First of all, everybody, if you go to CoinLedger, they have a free portfolio tracker, which is what I've been using, which makes it so much easier for me, because when I hit the button for taxes, it's all right there. Mm-hmm. Which it helps me for my cost, not just my cost basis, my profit and losses, because I had to buy some real estate recently, last 3 months. So I just kind of checked out and go, okay, what am I in profit? Okay, I'm going to use that. And it worked out pretty well. So if you have that, it works out. There's a question. Ed says, Rob, is there a list of tokens that CoinLedger supports? I'm seriously considering booting my old crypto tax software. They support, it's not like a Tangent or another wallet. CoinLedger supports everything. And pretty much, and I don't know if is there even like for every exchange that I've ever put in, it's always gone through. I'm sure there's like some fringe crazy, exchanges, but it all goes by exchanges. It's not by cryptocurrencies, like say like a wallet. It just does everything, right?
Correct. Yep. We support tens of thousands of assets in the system. And even ones we don't support, which are very few and far between, you technically can map those yourself within CoinLedger.
True. Dubsky says, I've been using CoinLedger for years. My CoinLedger is set to FIFO. Just realized my Coinbase account is set to HIFO. Will this affect the data in CoinLedger?
It won't affect the data in CoinLedger. All of your transactions are still there. Yeah. But Coinbase's their own tax reporting, which is just informational, might look different. Will likely, for surely, will look different than CoinLedger's, because, again, the back end accounting is different. You said your Coinbase is set to highest in, first out. That means when they report your gains, losses, they're first selling your highest basis assets first. Where if you're set to first in, first out in CoinLedger, we're just pulling, the software is selling whatever you acquired first, regardless of the high or lowness of the cost basis.
Gotcha. Papel says, can you track crypto gains and losses when connecting CoinLedger after the transactions have been made?
Yes. Yep. It's all, we can pull everything historically.
Okay. How about this one? What can be done for wallets that are no longer known because the exchange no longer provides access to the wallets? I think this has happened before. We know like stuff like Celsius and Voyager, but that's a different case. Mm-hmm. The lack of access means they can't verify the wallet on that exchange. Well, this would be a great question for the IRS, quite honestly.
Definitely. Yeah. And we've dealt with this for years and years. We kind of have a list of things we recommend. One, I would send an email to the exchange if that's a possibility, saying, hey, I need my documentation for tax purposes, send it to me. A lot of times you will get it from them. But if they're totally gone, defunct, they have no support function, I would use a best faith, estimate to estimate that data within CoinLedger. And I would speak to a tax professional, because depending on your situation, you may or may not want to do things certain ways.
That's very true. And lastly, well, not lastly, I know, David, you got to get out of here, because we could talk about this all day, but we're going to have to do some
I got some time if we want to.
Okay. Well,
keep going for a bit.
JB says IRS is a scam, just so you know. They're not a scam. They make things difficult. That's all.
I'm with you.
Craig says, what if we didn't receive this CoinLedger email? What I'll do is, here's what I'll do. If you're on my email list for the Dan Teaches Crypto website, it's free. I'm just going to send out that email. And actually, hey, David, can you guys upload that to the blog post?
I can check. I believe we could, but I'll have to run it through our legal team just to.
Yeah, oh, sure. So yeah, just run something through. That way you can save that, and that'll be your declaration of, I'm going to go with this method, and that's it. Again, this December 31st is like a declaration, and that's this how your accounting method is going to be, universal method or whatever the other one was. And it doesn't matter unless you get audited, which apparently could happen. From what Andrews talks about, which I'm not surprised. I've been audited 3 times.
Really?
Yeah.
I never have. Hopefully they don't come for me.
Well,
I got nothing to hide though. So
yeah. Well, mine wasn't like a hidden thing. It was like where'd you do this? Where'd you do that? Just a pain in the A. And they always want to know something. Mm-hmm. But
just digging through all of your records sounds like the worst thing ever.
It's not the funnest, but once you're done, you're like, whatever.
Mm-hmm.
Boomer Crypto says, what about Act 60? Like, Rob, it's a great question. So like for me, for gains, capital gains and losses for in Puerto Rico, I don't have those because I'm here in Puerto Rico. However, I still have to report all of my taxes and especially this is going to be really relevant for me for cost basis. I'm going to tell you why. Let's say something happens to family. Let's say something happens to me and I have to move back to the United States. What happens then? Well, if I sell later and I don't know my cost basis, they'll be like, oh, we'll just put it wherever we want it to be. So if I move out of here, I lose the Act 60 and I'll have to do something. I have to make sure I have records now. So for this, I see it as I still have to report every year, which I do with my CPA. That's for Act 60 people, no capital gains. But if something happens to me, I have to, if in 4 years, which I'll probably still have crypto from now, I'll have to report that cost basis. Am I wrong on this one?
No, you're not wrong.
Is there a caveat? Maybe I can keep all my gains.
I'd have to run that through, but you're right in that you still need to track your income, because you will pay less tax on it, but you still need to understand how much you're generating.
Yeah, true. Rob says, how is the average cost not valid when it's in fact accurate? I guess they're not talking about averages. They're talking about, what did you buy this? If you bought Bitcoin, the first one at 10,000, you sold it at 20,000. We need to know that exact amount. Was it $10,001? Was it $9,999? We need to know. IRS wants to know that so they can squeeze as much money out of us. Because under the Biden administration, they said, there's a lot of tax cheats out there and they're all in crypto apparently. Ask Elizabeth Warren, she'll tell you. Mm-hmm. What's that, David?
Yeah, even though it's accurate, the IRS has laid out that average cost is not a permittable method to calculate your gains and losses in the United States. In Canada, that's actually how they require it. But in the US, you have to use, a FIFO or a specific identification type of what they call costing method. And if you Google CoinLedger cost basis, that blog post will talk all about this stuff.
Okay, good. Well said. Rob, you skipped over the cold storage question. If all you do is self-custody, I do a lot of that, do you need to input your cold storage deposits and withdrawals into CoinLedger?
Yes, you do. And over the years, CoinLedger has gotten much more sophisticated on bringing in that type of data, but that is data that you will need in, again, because it's important to show that transfer coming into your wallet going forward.
Yeah, I will tell you, I had a problem with your software under, it was my Ledger and Bitcoin UTXOs or something. And when I opened up a ticket for customer support, and they were really responsive. They said, oh, you have to do these three things, bing, bing, bing. And then all of a sudden, then all of them came through. So there's always going to be, you have to understand, everybody's that as we are in this new emerging sector, there is going to be like, nothing is going to be perfect. We're going to have to do a little work at it. But thankfully, I mean, I've been with you guys for 3 years now, and it's been a pretty good experience so far. So thanks.
Oh yeah, and I'll be the first to say, CoinLedger is not perfect. The challenge for a company like us is, we employ a bunch of engineers who constantly have to be keeping up with the innovation of the space, because we have to integrate with all of these new exchanges and DeFi protocols and blockchains. So it's a constant game of cat mouse for us, which is, what's the latest thing that people are using? We have to build integrations so that you can pull in that data accurately. So we're not perfect, but we do try to provide really, really good customer support. So if you have a question or you think something's off or buggy, shoot us a note and we'll hopefully be able to help you like we helped Rob.
Yeah. I've tried to do the same thing with Coinbase. Never get a response. It's crazy. However, I get 7 emails a week from scammers that say they're from Coinbase. It's crazy. So this is just a point of reference. Germany's the greatest, right? Rob, we're lucky in Germany. If you hold your crypto for 1 year and one day, you will not pay any taxes on it. That's crazy, which is pretty, that helps the citizens. David, here's a question for you. Trump takes office January 20th, and he has oversight. And of course, there's the Department of Government Efficiency. How likely or unlikely do you think it is that they come to the IRS and go, what the hell are you guys doing?
I have no idea. I think that'd be great. Hopefully. But I think just like the labyrinth of congressional needs that have to happen for like change to happen on that front. Again, I'm no expert in the legal side of how all that stitches together, but I think it'd be a great thing because it is way, way too complex, just to give them their money.
It is good. Gamma says, why is this exploding now? And I just learned about this 2 days ago. Was CoinLedger sleeping on it all this time? David, were you sleeping on this? What were you doing?
No. Now, I will say, I think we should have sent this email communication sooner. But a lot of the past months for us has been readying our systems to enable users to make this change seamlessly. And there's, that comes with a lot of work. And I think the reason why it feels like it's exploding now is because a lot of media outlets have latched on to this news and they're pumping it, where we were talking about it in the summer and no one seemed to care. So I apologize on the email, but we were not sleeping on it.
Yeah. I like I said, like if we were sleeping, we were all sleeping, because like this is the first week I heard about it. And I'm like, really? December 31st? But again, declaration, and it's just your decision. It's not like you have to go and fill out a form and send this to the IRS and go, I am going to do this. It's just, I decided on this date to do it this way. Correct. And as you upload your documentation in April or November, like I do, then there you go. Let's see. Does CoinLedger account for European law? How many countries do you guys service?
So quite a few. Canada, Australia, the UK, Germany, a handful more countries. And we support just gain losses reporting for most countries and any currency. So while CoinLedger in the US will actually autofill local tax forms like IRS form 8949, you can still use CoinLedger, let's say if you're in South Africa, to get, a clean Excel file showcasing all of your gains, losses, and income. You can take that and translate it into your local tax forms that you need. And so people use this from all around the world, but we only have that level of automated support for countries like the U.S., Australia, New Zealand, Canada, the UK, and a handful more.
I didn't know that. When we do this education series, remind me to talk about that, because I miss that every single time.
Yeah. So it's still very helpful for folks in other countries who just need to set what currency they need things reported in, and then they can use CoinLedger still to, again, the hard part, get all that data, figure out how much income in their home fiat currency they made.
That makes sense. Yeah, it makes sense. Saturn 12 says I didn't get the email, and this happens. What I would do, I want to just make a recommendation, everybody. There's a link in the description. It's like the only link, I think. Oh, it's one of the few that I have in there now. I just put in CoinLedger. You can go to the website. Up here where it says the portfolio tracker, start tracking for free. And if you put to get the free tracker, they're just going to ask you for an email, just like my website does. And then when you get all the updates. So just do it that way. Then you can have a portfolio tracker for free, and they can start sending you stuff about like, hey, this is what's going on. Hey, the IRS did this. Hey, IRS did that. So that's what I would do.
Also, if you didn't get an email and you believe you should have, meaning you're a USA user, feel free to just send us a message, and we'll be able to pull your user info, and we can send you that email manually if you need it.
Where would that would be under?
Yeah, you can email help@coinledger.io, or we have a chat widget in the app. I don't know why it's not appearing on your site, right? Oh, you're on the marketing site. If you were to log into the web app, so into your account, you'd see our little chat widget.
Oh, interesting. Awesome. All right, let's see. Frankly, I think there's a little confusion. Why are people exposing their wallets? Isn't that why you have seed phrases? Why would anyone pose their wallet? And if you don't, the IRS won't know also. Okay, let me tell you something, frankly. The thing is like this. If you have used any exchange anywhere in the world, they have your information. I hate to break that to you, right? When you signed up for it, they probably have it's some way you got your money in there, right? They have your bank account information. And I know that most, if not all of them, not all of them, most, they do a KYC process, know your customer, and they have your information. They're reporting to whoever that actually is. So if you're able to get into an exchange where they didn't ask you for anything, they're just like, just send us some money, consider yourself, well, first of all, if you didn't get scammed, that's amazing. But just consider yourself lucky. But if you don't think they have your information, they do. And now they were required, well, they were always required, right, to send information to the IRS. And now they're going to issue you a 1099, which is also going to go to the IRS. The IRS is going to say, oh, these guys made how much? We don't know the cost basis. So hopefully they tell us. If not, we'll make it up as we go along. Actually, I wonder how that would work. If there's no cost basis for Coinbase, and it's like, hey, David sold $1.5 million. What his cost basis is.
Exactly. So the IRS will get a document saying, I know David sold $1.5 million. It says here on this document that his cost basis has a question mark. I don't know. Maybe I should look into this. What's going to happen.
Isn't that goofy? Like, I mean, it's the dumbest thing. I mean, America, if you're not from America, this is how ridiculous we are. And the IRS is like, we know how much you made, but we want to see if you're going to report it. Oh, you didn't report it? Oh, we're going to audit you. Oh, you wanted to get audited? We're going to throw you in jail. It's unbelievable. The redundancy, it boggles my mind. Okay.
Oh yeah, I've been screaming about this for 5 years because we these 1099 regs have been 5 years in the making. And the frustrating part is they're forcing a square peg in a round hole because this is how it works for stocks. They're trying to force that into the world of crypto, but because crypto is fundamentally different, again, the transferability, cold wallet, self-custody, that doesn't exist in stock world. That's why you get these perverse outcomes that it doesn't fit with this space, yet they're trying to make it fit.
You know what? That was a question I got from a friend of mine, Patrick. He said, I'm going to read it to you. I understand the difference, But in practice, you would actually make this choice. And he's talking about the two allocation methods, global or specific unit. I keep track of all my trades and cost basis using TradeLog, a classic stock trading software that keeps track of your trades and cost basis, as well as lets you match according to the blah, blah, blah. I think that's where it's coming from. Like they see what's going on with equities and like, well, let's just do that over here because a wallet's a wallet. And that's what, like, if you're in Robinhood, I don't want to convolute this whole conversation, but that doesn't make sense when you said that. Mm-hmm. Okay. Jason says, if you joined an exchange, they know you in Australia, the whole crypto. Okay. Just hold. Okay. We're coming up on an hour. I need David to be fresh for the next video. Let's let him get out of here. So everybody, links in the description. We'll have more information on this. I'm going to do an education series with the guys from CoinLedger so we can make this super simple. So I don't want to have anybody stressed out on taxes. We have enough to get stressed out. Go take a look at your portfolio right now. So let's get out of here because market's crashing. Anyhow, David, thanks so much for stopping by. I appreciate it, man.
Yeah, thanks again, and we'll see you later.
All right, guys. Have a good day. Adios.